Story. Take a look. Look at that benchmark right there as an order flow story. The large, heavy shouts of sell, sell, sell all the way through that process. The measured move to the downside here. There was a prior low right there. You start to recognize the concept of benchmarking, don't you? So there was a prior low right there. There's your structure. You can start to recognize from that prior low going forward, and then the prior high at the top edge up here, you start saying, right, 1942, low price, 1939. It's 3 points. 3 points, right? 42 to 39 is 3 points. 39 minus 3 is 36. So you start saying, right, part of my benchmark structure would be a buy at 36, correct? So you start looking for a benchmark structure about 36. There's 36 right there. And what happens at 36? Well, it's not quite 36 when this first one happens, but you start seeing it coming down, coming down, coming down. It gets bought, gets bought, gets bought, and you go, right, let's get into the buy trade. The bottom buy trade was this one here. It goes back above the Baltic, and you make yourself a nice profit of $150 per contract. And then the price comes down to 36, which is now the benchmark price level. And you see this candle forming. Now, during this candle, we got another huge sell volume getting jammed into the bottom edge, another huge buy block coming in behind that trade, and another huge opportunity to buy again into that same price area. And this one went from a low price of 36s up to 38.5. $250 profit was yours from that benchmark. Benchmark. Is it not obvious? The quality of the benchmarks are there for everybody to spot. Is it not obvious that these are the trades you should be absolutely on board with? Absolutely. Did the value develop on the buy side? Was it a spring trade? Yes, it was. Answer to both questions was yes, it was. When we started to come back down and retest, did we get an opportunity on the retest? Well, look at the book during that retest phase here. We get a big volume break to the downside. On the retest, we've already established, of course, this level's now in play. We've already established that that's the case. We start to see some heavy shouts of sell, 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 sell. Finally, somebody gets jammed at the bottom edge of the sell, right on the stops, and you start to see that as a possible reversal trade. And if you didn't see that as a possible reversal trade, you must have seen this as a reversal trade. The sellers get jammed at higher prices. The buyers fill in right behind the sellers, and you buy off that price at 35.3s in line with a dropping real yield. And what happens to that trade? Well, it goes from a price of 35.3s, high print of 37.7s, and you make yourself another $200 profit. That's what happens. $200 doesn't sound like much. It only took you 6 minutes. 6 minutes for $200 doesn't sound like much. What world do you live in? For that amount of work, you can make $200, guys. Come on. This is why, in this case, this is the type of the easiest profession in the world. To make that kind of money in 6 minutes, my goodness, that is very impressive stuff, guys. Very impressive outcome. The value didn't build it. That's why it's not developed any further. The value did not build from that, and we started to see the sellers pressing back down against that narrative. But that's okay. That's only known after the event, isn't it? Crazy good benchmark trade opportunities, guys. All you've got to do is draw a couple of levels, recognize the opportunity. From a value point of view, this is why it was a good buy trade. The sales looks fantastic. The sale looked brilliant, didn't it? We had this big commercial sale. We talked about it earlier. We referenced it for everybody. We talked about the idea of this becoming a commercial sell trade into the top edge just because of the huge drop-off in real yields, or the huge rally in real yields, as it is, of course, as it's negative. And you can obviously start to recognize the idea of this press into those higher prints as pure market manipulation. So you'd have been working those sell orders. 1942 is down to a low price of 35s, $700 sell side profits. I'm assuming everybody got short into that sell-off. Into the bottom edge, you've got to be careful because now real yields are punchy. But when the price then retests the low print here, we've obviously started to establish a bit more. We got a toxic seller coming in here at 1940, not surprising. And obviously into that 1940 toxic seller, we got level 2. We got the real yields falling. You had a nice opportunity to buy into that low, and that was your trade right there. Are we going to buy the lows this time? Not a chance. Why are we not going to buy the lows this time? Why are we not going to buy the lows this time? Well, at the moment, the value tells us not to buy the lows because this was a failed auction, right? Because this was a failed auction, I'm not going to buy that back into this low price at this stage. I'm going to hold on to my long trade and hope I don't get stopped out at break even. I've already taken some nice profits on a level 2 break here, so I'm already in good shape. I don't have to worry about making money on this trade. I've already done that. So I've got to stop at break even. But why would I not buy again here? Because the value tells me not to. So I want to make sure I get a nice clean, there it goes, as expected. So there's the stop run that we would have expected. It needs to build that bit of value, and then we look again for a new transition at lower prices. The last toxic buyer was down in this area here, and we start looking in that area for that toxic reversal buy trade. And you can see that just even that commentary, guys, called the trade absolutely correct, didn't it? Even that little commentary right there called the trade spot on. He says we're not going to rebuy the lows here, and look at what just happened. I can't make it up, Jared. I can't make it up. I mean, it happened in real time, so it's not like anybody's looking at it going, nah, you never said that was going to happen. We bloody well did. So we can obviously see that that's exactly what happened. We can see where the trade's got a measure to. We can start to recognize whether we're going to get a transition off of that price, and we can start executing. I've already got some longs off 1932. I hope you have as well, guys. And that's already made me a profit of $100 per contract. So you'll see that there was a sell block coming in at 32s, 1932s to lean against. So I got a buy trade at 1932.1. I've just taken some profits at 1933s. and we've just made a nice profit, haven't we? We've just made an absolute banker profit on the buy side. Is that got value to buy into? Yes or no? Is that a value to buy into? Yes or no? Yes. Is it going to be a buy trade? I've no idea. Do I care? No. I really don't care. If it wants to go up a little bit and the value doesn't develop, I'll take my $100 profit and I'll scratch it and I'll go again if the value improves on the next opportunity. That's how you deal, right? That's how you deal. You just work it. You work the trades. And on this occasion, we only got $100 and we scratched out at +1. And we go back to the drawing board and we go, okay, let it do what it's going to do. The market's obviously incredibly bearish. Real yield suggests we should be going way below the bottom edge of this market, possibly down to this commercial buyer down here. The last time we saw a big commercial buyer. So we can already recognize that real yield suggests it should be down in those price areas. So was I expecting more than $100? I'm surprised I even got $100 in some respects. So because of that, I'm not surprised that we only got $100 and that's why we took profits at $100 as I explained. But we still did okay. We got a transition. I got the buy trade on. I made $100 more than anybody else made. And obviously I can start working it again if I want to. But again, I'm very, very cautious about what the hell's happening in here. Quite happy to let it go and let it work away to its heart's content. And if I get a transition, have I got a short-term buy transition? No. So I'm not going to be taking any trade at the moment. I'm not going to be taking any trade at the moment on this narrative here. So I'm quite happy to buy it. But I'm not happy to buy it right now unless I get an incredibly strong buy side transition in terms of order flow. So again, just that idea of waiting for the good stuff, picking up the good stuff, making some monies from it, about some value ideas, about some transition ideas. We did actually get another transition, and I did buy a little bit of business against 31.5. It traded 32.5. I've made $100 on the trade, and I've taken another stop at break even plus a couple of ticks. So I did buy some, and as I said, I paid 31.5 for it. So 31.5 is there. That's what I paid for my second trade just there. So we took $100 off that trade as well. Why did I buy it? Purely order flow. Purely order flow. We got a seller that got jammed at 31.5. The price dropped through the seller. I put a buy stop order just above the seller because there was no sell book coming in behind the seller. And I thought, you know what, I could probably get a quick $100 out of it. I did get $100 out of it. And I've been scratched at +1 a second time. But I've made $200 per contract in the last 2 minutes. How much have you made in the last 2 minutes per contract? You know, see what I mean? It can be done as a scalp trade. It doesn't necessarily mean that you're holding on to these trades as huge, big buy-side swings, because I don't think it is a huge buy-side swing, but can I scalp it? Of course I can scalp it. I don't even need to see value to scalp it. I can simply scalp against the order flow because I can simply try and get some basic idea. Is the value really bearish or just bearish? Well, the value is bearish. It's not really bearish. The real yields haven't gone any higher than they were before, but the price is a lot lower, so can I scalp the bottom edges? Yes. So if I can scalp the bottom edges, I can still make some scalp money. What do you mean the real yields haven't gone any lower than they were before? Well, look, that's where the real yield was as before. That low has not been tested. I know there's short-term selling in here, but we can obviously recognize that that's not gone any lower ever since this low price was in. The macro suggested that the gold needed to still fall because the macro suggests we should be way below this prior low down here. But the short term's not that bearish. It doesn't mean I can't scalp into bottom edge buys, and because that's what I can do. I can take that trade on. I can take a bit of business here. Did you get the massive transitions there, guys, on gold? I did. I got the massive transitions on gold, so why didn't you guys? Got a big stop at break even on the gold. Huge transition. Benchmark quality transition, guys. Benchmark quality transition. And a nice takeaway. I mean, it's not the biggest takeaway I've ever seen, but certainly the trade coming off the 29.5, traded 31s. It's another $150. Is it a macro buy trade? No. So should you be scalping 10 ticks, Logan? Yes. Should you be scalping 10 ticks, Jared? Yes. Should be scalping 10 ticks and getting your monies and then getting out some business. It's not a macro buy at this stage. It's going to work you. It's going to work you until you get that trade right. Does everybody see that as a benchmark buy trade? So did everybody see that as a benchmark buy trade? Take a look about what a benchmark on gold can look like. Look at that, guys. Look at that. You see it? Pretty crazy, right? Pretty crazy when you think about it. How easy it is to recognize a story, get the deal done, and then rattle it back into a bit of business there. It's only $150, but it's still another $150 in your trade world. It's still $150 in your world. It's still $150 paid into your account. This is a 10-second chart. So it took you 10, 20, 30, 40, 50, 60 seconds to make $150. 60 seconds, guys. Anybody that doesn't think that's a brilliant trade in terms of the money has to have a right good look at themselves in a mirror. $160, $150 in 1 minute is more than these kids make in a day. Never mind in 60 seconds, guys. A little bit of realism and a little bit of respect for the money you can make on these trades, guys, goes a long way. It's a case of working these orders. Cash open shortly, guys. Off and running again. Friday. Quad witching today as well. Remember that, quad witching. So good volatility perhaps coming into the cash open, guys. Good volatility as people unwind positions, roll over new positions, etc., etc. So there's going to be a lot of stuff kicking off at big style, guys. So be careful.